Hi, welcome to my channel Management Accounting Made Easy. This is part 7B of Standard Costing and Variance Analysis. Here we are going to use a numerical example for the material planning and operational variances. Okay, here we are going to calculate the material planning and operational variances using this example. Nice Cream Company makes quality ice cream. This year, the company has decided to make different flavors of mochi ice cream for the first time. One of the main ingredients for mochi is glutinous rice flour. The original standard price for the rice flour set by the management is $7 per kilogram. Due to bad weather, the supply was affected and the price has increased by 25% from the standard price. So we can see that increase in price is beyond the control of the purchasing manager because there is a general price increase in the market. Okay, now the second one says, according to the original plan, each batch, which is 50 ice cream in a batch, requires 1.2 kilograms of glutinous rice flour. Because mochi ice cream are made for the first time, there was a 10% wastage is expected until the employees gain the experience. So we need to give allowance for the wastage. Budgeted production 45,000 batches, and they have given the actual production 38,000 batches. Actual quantity purchased is 46,000 kilograms and the actual price paid is $414,000. So the actual quantity of rice flour purchased is 46,000 kilograms and also they have given the price, actual price paid. Calculate the material planning and operational variances. Okay, we are going to calculate the material price planning variance. There are two methods. You can choose whichever method you like. So this method one, we uses the number of kilograms bought. So we'll have a quick look at the question. The question says the original standard price is $7 per kilogram. But there is a general price increase in the market, which is 25% increase. And the actual quantity purchased is 46,000 kilograms. So we'll calculate the material price planning variance using our method one. Original budgeted figure, which is our X and T, that is before the budgeted figure, $7 per kilogram times it by the 46,000 kilograms we bought. So that is $322,000. Now the revised budgeted figure, which is ex post, $7 plus the 25% increase. So you will get $8.75 times it by 46,000 kilograms. So you get $402,500. So the material price planning variance is the difference between the ex ante and the ex post figure, which is $80,500, which is an adverse variance. So we are going to calculate the material price operational variance using our method one. So the same question, $7 per kilogram. This is our X and T price. And there was a 25% increase. And they bought 46,000 kilograms they bought. And the actual price they paid, £414,000. So we are going to see how to calculate the material price operational variance. Now, we have to use the revised standard price because that $7 per kilogram is no more relevant because there is a 25% increase. So our new price, standard price per kilogram is $8.75. So $8.75 per kilogram times 46,000 kilograms, you will get $402,500. But the actual price paid is $414,000. So the material price operational variance is 11,500 adverse. So here you need to note the standard price is the revised standard price because the original standard price of $7 has no meaning, because if you use it, your variance analysis will, you will get a variance which has no meaning. Okay, we are going to calculate the material usage planning variance here using the method 1. Okay, according to the question, the original standard price was $7 per kilogram, and according to the original plan, each batch requires 1.2 kilogram of rice flour. Because they're producing it for the first time, there is a 10% wastage is expected. Actual production is 38,000 batches. So we'll see the material usage planning variance. Because the sole reason we are preparing the price, material price and material usage planning variances, because we need to revise those standards. So we have seen in the price variance, we have used the revised standard price. Here as well, we'll see. The original budget, according to the original budget, they said 1.2 kilogram per batch, but they have actually produced 38,000 batches. So 38,000 times 1.2, they should have used, according to the original budgeted figures, which is called ex ante, 45,600 kilograms. But there is a 10% wastage is expected. So we need to include that 10% wastage in the standard. So the revised budgeted figure, which is the ex-post figure, 38,000 batches they produced times 1.2 kilograms. Then we got to add the 10% wastage. So we got to times 1.1. So you get 50,160 kgs. So I'll quickly explain again. According to the original budget, 1.2 kilogram per batch. You got to add the 10% on top. So 1.2 times 1.1, which is the 10% increase or loss, times it by the 38,000. So you get 50,160 kilograms. So the usage variance in kilograms is 4,560 kgs adverse. Now, as usual, we need to convert that into money value. So when you convert that into money value, you have to note, we need to use the $7 per kilogram because originally the management thought, or management has planned, they are going to pay $7 per kilogram. So they are interested in that $7 per kilogram. So 4,560 kgs times $7 per kilogram, you get $31,920 adverse. So this is our material usage planning variance using method 1. Okay, we are going to calculate the material usage operational variance using our method 1. So the information is given, $7 per kilogram, the original price, 1.2 kilograms, the original, according to the original plan, per batch, but there is a 10% wastage expected. 38,000 batches they produced, and the actual quantity they purchased is 46,000 kgs. Actual quantity of material they have purchased. Now, we'll see the material usage operational variance. Now, as we know, we have to use the revised or exposed standard figures. So, 1.2 kilograms per batch times it by 1.1. That is, we are including the 10% wastage. Okay, so 1.1 times 1.2 times the 38,000. So according to the standard, they should have used 50,160 kgs of flour. So I'll quickly repeat it. According to the original standard, they should have used 1.2 kgs per batch. But there is a 10% wastage is expected. So we need to include that. So 1.2 times 1.1. Now this is per batch, but they have actually produced 38,000 batches. So we need to times by 38,000. So you get 50,160 kgs. This is the standard usage. But the actual usage is given in the question, which is 46,000 kgs. So the usage, the operational usage variance in kilograms is the difference between the two, which is 4,160 kgs favorable. Now, as we know, we need to convert that into money value. But because we are using method 1, the money value should be times it by $7 per kilogram. So that is $29,120 favorable. As I mentioned before, the management has set $7 per kilogram originally. So they will be interested to know the money value using the $7 per kilogram. So 4,160 kilograms times it by $7 per kilogram, you get $29,120 favorable. We are going to cross-check our workings. No exam question is going to ask us to cross-check, but we want to see whether we have done our calculations correctly or not. So we are going to take the original standard cost, which is the X and T, the original standard cost. So we have produced 38,000 batches. According to the original standard, each batch we should use 1.2 kgs, and each kg we should pay $7. So this is according to the original standard. So this total standard cost should have been 38,000 times 1.2 kgs times $7, which is equal to $319,200. Now we are going to compare this with the actual cost. That was $414,000. So the variance is, the material cost variance is $94,800 adverse. Okay, so now we are going to add all the variances, all the material price planning, operational price variance, and usage planning and usage operational variances. So all the variances we have calculated, we are going to add. So we have calculated material price planning variance as 80,500 adverse. Our material price operational variance is 11,500 adverse. And we have calculated the material usage planning variance $31,920 adverse. And material usage operational variance $29,120 favorable. So when we add all these variances we have calculated, that should add up to $94,800 adverse. So our calculations are correct. So we are going to calculate the material price planning variance under method 2. So method 2 uses the number of units. Here in our example, the number of batches we have produced. So if we look at the question, the same question, $7 per kilogram, that's our original standard, 25% increase, price increase, and 1.2 kilograms per batch expected, but there is a 10% wastage. Actual production, 38,000 batches. As I mentioned before, method 2, we need to take the number of batches we have produced. So here we are going to calculate the material price planning variance. So the original budgeted figure, which is the ex ante, okay, so 38,000 batches. Each batch we expected 1.2 kilograms, but there is a 10% wastage, so we need to consider that. So 38,000 times 1.2 kgs times the 1.1, which is our 10% wastage, times the $7 per kg. So we will get $351,120. This is our ex ante cost. Now we'll see the revised budgeted figure, which is the ex post. So here we need to consider the 25% price increase. So $7 times 1.25, which is our 25% increase. So the new standard price is going to be $8.75 per kilogram. So times 38,000 times 1.2 kgs times the 1.1. Then we will get $438,900. So the material price planning variance under method 2 is going to be $87,780 adverse. So here, the material price operational variance is not going to change. So the material price operational variance is going to be the same as under method 1. So we are not going to recalculate material price operational variance for method 2 because it is same as method 1. Material usage planning variances under method 1 and method 2 is the same. So that's why we are not going to recalculate the material usage planning variance for method 2 because it's exactly the same as under method 1. So we are going to see material usage operational variances under method 2. So the same question, $7 per kilogram, 1.2 kilograms rice flour originally planned per batch and 10% wastage. Actual production 38,000 batches and actual quantity purchased 46,000 kgs. So we are going to calculate the material usage operational variance under method 2. Standard usage. Remember, method 2, we have to base our calculations based on the number of batches we have produced. So 38,000 batches times 1.2 kgs per batch, and we need to include the 10% wastage. So we need to times by 1.1 again. So 38,000 times 1.2 times 1.1, then we will get 50,160 kilograms. But the actual usage is 46,000 kilograms. So the material usage operational variance is 4,160 kgs favorable. Now, remember, when we convert that into money value under method 2, we have to use the revised standard price, which is $7 times 1.25. So the revised standard price is $8.75 per kg. So 4,160 kgs times it by $8.75 per kg, then you get $36,400 favorable. So please note the difference between the method 1 and method 2. Like under method 1, we are going to cross-check our workings under method 2 as well. Whichever method you work or you do, the total variances must tally. So here, as we have seen before, the standard cost $319,200 and the actual cost $414,000. So our total variance, which is our material cost variance, should have been $94,800 adverse. So now we are going to add all the variances we have calculated under method 2 and see whether that is going to add up to $94,800 adverse. So we'll see. The price planning variance is $87,780 adverse. Operational variance $11,500 adverse. Material usage planning variance $31,920 adverse. And material usage operational variance $36,400 favorable. So when we add all these, it's adding up to $94,800 adverse. So our calculations are perfect. Thank you for watching. If you like this video, please like, share and subscribe. I'll see you in part 7C of standard costing and variance analysis.